This is a download of MoneyBox Live from the BBC. For more information and our terms of use, visit bbc.co.uk/radio4. To find out more about this week's programme, or to view transcripts, stories and related internet links, go to the website bbc.co.uk/moneybox.
Hello, in case you missed it, there was an emergency budget yesterday, and today's MoneyBox Live is devoted to answering your questions about the changes in that budget. The Chancellor said it was tough, but fair. But how tough was it? And how fair? Unlike many budgets, there was more about welfare benefits than tax, though there were plenty of tax changes to keep accountants busy. Those tax changes will bring in another £8.2 billion, but cuts in welfare benefits will save much more, £11 billion. How tough and how fair is that balance? All these changes are on top of those announced by the previous government in March. It's been described in the press as pain now and more pain later, that was The Guardian. Everyone worse off in the toughest budget for a century, that was The Telegraph. And the axe and tax pact in The Times. Well, after most budgets, people want to know, will I be worse off this year? I think everyone will be. And the question is, how much? And those questions are already pouring into our phones and emails. And to answer your many questions, we've got a whole hour today. It's a bit complicated. We have half an hour on Radio 4 FM, as usual. An hour on the web as a webcast. There's a link on the front page, bbc.co.uk/moneybox. And there you'll also see us on our webcam. And you can also hear the whole hour on Radio 4 Longwave. We really are the test match special of personal finance. And if you miss it, you can listen again on our website to the whole hour. Anyway, there's a danger I'll spend the whole programme telling you how to listen, so let's get on with it. You can call MoneyBox Live now, 03 700 100 444, email through our website. With me to answer your questions today, Rachel Hadwin, she's a rights advisor with Working Families. Graham Hooper is from financial advisors Best Invest. Leonie Kurzweil is a tax partner at accountants PricewaterhouseCoopers. And Anne Redston is visiting professor of tax at King's College. And the first question, and straight on to tax, is from Susan in Cheriton Fitzpaine. Susan, your question.
How is capital gains tax going to work following the budget?
Well, that's a very big question. Let's take another one, because Amanda has a very specific question in Brixton about capital gains.
Yes, I'm in the unusual and fortunate position of having made a capital gain on the 1st of June. I was wondering whether this was going to be taxed under the old rules at the 18%, because I believe the budget date is effective from the 23rd of June. OK,
well, I'm sure we'll come on to that and how that works. So 2 questions on capital gains. So let's start with one of our accountants, Leonie Kurzweil.
OK, in overview, the rate change will take effect from midnight last night. So capital gains tax rates move up from 18% to 28%. So Amanda, the gain you made at the beginning of June will be taxed at 18%, not the new tax rate. It's slightly complicated now. We've got a rate change partway during the tax year, but what's very clear is that you can structure your affairs, so set off losses or your annual exemption, so you get the best possible answer.
So you can set your losses off against
your
gain
28%,
you make either at the new rate or at the old rate.
Yes.
But in Amanda's case, she made the gain on the 1st of June, so that will be taxed at 18%.
Yes.
All of it,
absolutely,
flat rate.
Yes.
And we've also had an email about this, which we'll bring in at the same time. Somebody says, John says, could your experts clarify what happens when a taxpayer who is just within the basic rate band sells, say, a second home, crystallising a gain, say, £50,000? I suspect that is your gain, John. Will the 18% apply to the whole gain or just to the part of it? Let's hear from our other accountant, Anne Redson.
What happens in the new regime will be that you can use up what's left of your basic rate band. So if you've got, say, £25,000 of gain, you top up the bit that's remaining in your basic rate band, and anything over that is then taxed at the 28%.
Right, so it's not that if you pay basic rate tax, the whole gain is taxed at basic rate. No. It's sort of added on to your income in effect.
It's like having an extra slice of income, right. It's just the rate is different.
But worth saying that the amount of gain you can have before you pay any tax is still £10,100.
It is.
That's not been
changed.
It is,
and that's a very important relief, because most people be lucky to make a gain of greater than that.
Sure. And Susan, you asked us a very general question. Does that answer all your points, or is there anything else you'd like to know?
Well, it doesn't wholly deal with them.
Tell us what the others are.
Is there any change in the starting point of the calculation? And is there? Yes, that is the principal. The principal question.
Okay.
How,
I mean,
how's the starting point calculated?
as I understand it, you start with what you paid, and then you go to what you sold, and you subtract one from the other, and there's no indexation
with your proceeds.
Yeah, there's no indexation been brought in,
There's
no
indexation.
tapering or anything like that.
No taper. That's why the rate is relatively low, because the Chancellor decided not to make it more complicated by having indexation or taper.
And I suppose some people, Graham Hooper, would think that's pretty tough if you've got a second home, as some people do, and you're going to be. It really is house price inflation that's the gain. It's not.
It is, yes, and houses, of course, they're pretty lumpy assets. You can't sort of sell off half a house to sort of be capital gains tax efficient. So it's you're probably going to sell one, as I think the person on email said, £50,000. You're going to sell it in one lump, and that could well go from a sort of a low basic rate taxpayer to a higher rate taxpayer, and end up paying more tax in that instance.
Okay. Right, well, thanks all very much. Sorry, Susan, yes, you've got a final question, I think.
Yes, there was, a couple of years ago, something called Entrepreneur's Release. It depended on whether it was a simple owned asset or something which you used in trading. How has that been affected?
Yes, because we were talking then about a gain personally made, but of course Entrepreneurs Relief has been extended a lot, Anne, hasn't it?
It has been increased from £2 million to £5 million, but that is a lifetime limit. So over the course of your lifetime, you can use up to £5 million of gain, which will be taxed at 10%, not at 18 or 28.
And if you've made another gain as well, that's just counted completely separately from the Entrepreneurs Relief.
Completely different box.
Right, okay. Susan, does that answer all your questions now?
Yes, that does. Thank you very much.
A satisfied listener. Thank you very much indeed for that. We may get more on capital gains tax, but let's move on. Thanks to Susan and to Amanda for her question. Anne is calling us now from Devon. Anne, your question.
Oh, hello. Well, I'm bedbound and I'm on disability living allowance and incapacity benefit. And I just wondered if you could tell me what the difference is between the retail price index and the consumer price index, because the Chancellor said, that benefits are going to be increased now using the consumer price index instead of the retail price index. Does that mean that we're going to be worse off year on year and that benefits are going to fall behind inflation?
Yes, there are different ways of measuring inflation, but he is going to choose one that's generally shows inflation to be lower. And are you going to be worse off? Yes, because the government's going to save nearly £6 billion over 5 years, and that's coming from, I'm sorry to say, people like you, Anne. Rachel Hadman.
Yes, there are two differences really between the two indexes. One is that the consumer price index doesn't count some things that retail price index does, and they're also calculated differently. But what you need to know is that your benefit will go up much more slowly using the new index. It doesn't apply to state pensions where we've got a triple guarantee that it'll be the highest of the retail price index, the consumer price index, well, earnings prices, or 2.5%, whichever's higher. But for other benefits, it will now be that lower rate that applies.
So really, it's in effect, that's a cut, isn't it? Each year it's going to be cut slightly.
Exactly, yes.
Yeah.
Certainly cut from what it would have been. I mean, it will still go up.
You'll still see a rise. So you might say that you won't notice, but of course you will notice because other things go up.
Yeah. I did do some calculations, Anne, which might be interesting, based on the CPI and the RPI figures in the Red Book, and these are not completely exactly right, but they're roughly right. And it showed that the cut over the 5 years of this policy would be, the first 5 years would be £6.5%, and over the next year after that it would rise to 8.4%. So that really means that in 5 years' time you'll be getting 8.4% less than you would have been if they hadn't made this change on the predictions of what those indexes will be. So it's a big cut. I mean, it's going to be a few pounds a week, several pounds a week for people in your position.
Yes, it's going to make a lot of difference to me.
I'm afraid it is. I'm very sorry about that. Do you want another
one more question?
Yes, of course.
He also said that there are going to be changes in the method of assessment for new claimants of disability living allowance from 2013. Does anybody know if there are going to be any changes for existing DLA claimants too, for the way they're assessed?
Rachel?
Yes, I'm afraid, Anne, that as far as I can remember from what he said, he is planning to extend that to existing claimants as well. But he has said that it will be working age claimants only. So I don't know how that will affect you by the time it comes in.
And that will be starting from 2013.
Yes.
And this is going to save quite a lot of money. I think from memory it's about £1 billion. So is that right? You're frowning at that. You don't think it is that much?
I don't think it is as much
okay.
as that. But it is several million pounds.
It's certainly a lot over the time. So
and what we're expecting is that the application for DLA, the way that you claim it will be different. So rather than relying on self-reporting your care needs, your mobility problems, you will go to an assessment, whereas at the moment some people get assessed, but only if there's not enough information to make the decision.
Actually, I've just got the table here in front of me, and it does say that when the change starts in 2013 it will save 360 million, but the next year the saving will be £1 billion. So by 2014 it will be £1 billion, and all of that of course from people currently getting disability living allowance. So that is
so
a considerable amount.
So they're expecting you to have to go to them for it to be assessed by one of their doctors, because at the moment
we don't know the details.
They come to me.
That's
because
right.
I'm bedbound, so they have to come
I wouldn't
to me.
expect that to change. I would expect that those people who it would not be reasonable for you to attend a centre, they'll still come to you. But what's more worrying is they're obviously expecting fewer people to claim.
And Rachel, it's fair to say, isn't it, that a similar change has been made with incapacity benefit, now employment and support allowance, that there's a new medical test, and a lot of people have not succeeded in that.
Yes, that's a slightly different thing, that was already a medical test, but the new medical is harsher.
Sure,
yeah,
yes,
but we're worried for the same
it has
reasons.
had that effect.
Yes.
And this is going to be a similar sort of thing, is it?
Well, that's one of the things that would certainly be a worry, is that given that we know that the test for ESA doesn't always spot things, doesn't ask questions about people's particular conditions, it's carried out by a private company, how are these medical assessments going to be done? What are the safeguards? And will it mean more wrong decisions, more people having to appeal to get their benefit?
I would have thought, Anne, in your case, if you're bedbound, as you say, it would be very unlikely that you'd fail the test, but one can never say. And I think, Rachel, perhaps the sad thing for people like Anne and the other people on this benefit is the uncertainty for the next 2 or 3 years.
The uncertainty and the stress of not knowing whether their benefits will remain and how hard they're going to have to fight to keep them.
And thank you very much for your call, and I suppose I should say good luck for 2013, but don't worry too much about it before then. Ken now has a call in Weston-super-Mare. What's your question, Ken?
Oh, hello. Yes, I'm receiving quite a bit of my income from the state on the state earnings related pension scheme, SERPs. Now, it wasn't updated this year, although the basic rate of pension was updated by 2.5%. This did not include SERPs. Now, could you tell me what the position is from now on?
Well, I think I'm the one to answer that, Ken, because state pension is one of my specialities, sadly. As you rightly say, the basic pension, which is the one you get paid on your national insurance, was raised raised by 2.5% this year, but SERPs and all the extras was frozen. In the future, as we understand it, the basic pension will be subject to this triple guarantee that Rachel Hadwin mentioned. It will go up either by the Consumer Prices Index or earnings, or 2.5%, but for 1 year only, that will also go up by the RPI as well, if that's higher. But SERPs and all the other bits will go up by the Consumer Prices Index.
Oh, they will.
So in effect, you'll have two bits to your pension. You'll have the basic state pension, which will go up one amount, and all the rest of it, which will go up another amount.
So the RPI has now been superseded by the
The CPI, yes, that's right. For all these things, all benefits anyway. And there is talk of moving that for tax allowances as well, but that's not happened. So it's going to be complicated, and one of my worries is that because it will be very difficult to work out what you should get, A, it'll be hard to check, and B, the Inland Revenue, HM Revenue and Customs, I should say, won't know, and you might get the wrong tax deducted from your pension. That is a big problem at the moment.
I see.
I'm glad to see my accountants are nodding here.
On the September figures?
I'm sorry, say that again?
Will it operate on the September figures?
It will. It will. And although we have a September figure for RPI, what they predict, we don't have one for CPI. I've been trying to get it from the Treasury all day, and I'm told I might get it by the end of the afternoon. But it's about 1% different, we think. It might be 1.5%, but it's certainly 1% different. So it will be a bit of a change.
But the SERPs will be uprated by something.
Well, that is the intention at the moment, yes.
Okay, thank you very much.
Okay, thanks very much indeed. We've also had questions about public sector pensions. Is that going to be the same on public sector pensions, Rachel?
Well, I think the problem with public sector pensions is more how they are funded and what they're going to do about the fact that there's a huge gap in funding.
And they're having a big review of that, of course, with John Hutton, aren't they?
So we don't as yet know how they're going to deal with that. Is a huge problem.
But at the moment, I think the intention is to uprate the pensions by CPI rather than RPI, so that will be a slightly smaller rise for those as well. As I said, everyone loses at the moment. Any callers who think they're going to benefit from the budget, perhaps they'd like to ring in? Simon is calling us from Dingwall. What's your question, Simon?
Good afternoon. I wish to ask about the proposed change for the purchase of annuity at present compulsory at age 75. Can you clarify the position, please?
Right, yes, at 75 you either have to buy an annuity or take what's called an alternatively secured pension, don't you, Anne?
Yes, the government announced when it came in that it was going to scrap the rule where you had to buy a pension, an annuity at 75. Because they haven't actually worked out how to do it yet, what they've done in this budget is say that for 2 years, the next 2 years, you don't have to do anything. You can just leave your pot as it is. And within the 2 years, they will look at it, at the problem, and decide how to deal with it. But they have said that they don't agree with the old rule, which is an enforced annuity at 75.
But we don't quite know what they're going to replace it with. Does that help, Simon?
Well, it does help, thank you. It wasn't clear to me exactly what was happening, but the answer is we have to wait and see what's going to happen.
You have to wait and see, but meanwhile, if you are 75, you don't have to do anything because that's been extended till you're 77.
In that position, I would have thought.
Yeah.
Just picking up on Paul's point about these are people that could be better off for two reasons really. Well, one is you'll be older and theoretically be able to get a better annuity and pension from that, and secondly, as you get older, people tend to get iller, and if you shop around, you can get
That's a silver lining.
Better
You're as cheerful as George Osborne.
Well, but sure. the point I really want to make is it is worthwhile shopping around depending on your health because the difference can be significant in terms of the annuity that you receive.
Okay, well, thanks for your call, Simon. A lot of people have been asking similar things. Mike has a question now in Aberystwyth. Mike,
yes.
Your question.
My specific problem is that I'm on job seekers allowance, and that entitles me to a housing benefit. However, I understand, I don't know the details, that the Tories are cutting housing benefits, and in fact they've even promised to abolish it before the election. I'd like to know, at the moment, how much have they cut it in yesterday's budget? It's very critical for me for staying in my home. How much are they cutting housing benefits?
Okay, well, this is a very complicated set of changes that are being made, and I'm going to pass this over to Rachel Hadwin, who's looking confident at the moment.
Well, I think there's nothing to worry about in the immediate future. So the changes will start happening from April next year. That's one thing.
April.
Yeah, April next year. One thing that is crucial to know, Mike, is whether you rent privately or council or social housing. Private, right. Okay, so the changes are worse for those people who rent privately because that's where the limits are coming in. That's where they're trying to save money on the housing benefit bill. So what they're saying is that from April 2011, the local housing allowance, which in effect caps housing benefit if you rent privately, will be £250 for a one-bed flat, £290 for two, £340 for three, etc.
Sorry, could you repeat that?
I could indeed. £250 for a one-bed, £290 for a two-bed, £340 for three, and £400 for four and one. That will be it. It won't go up any higher than that.
Plus, there's going to be no housing benefit for houses of more than four bedrooms.
That's right. Yes, it wouldn't be taken into account. In addition to that, in October of the same year, so October of next year, they've said the local housing allowance will be based on the 30th percentile of local rents.
You're going to have to explain to us what that means.
Yes. Well, local housing allowance is currently based on the median. So if you've got a range of figures, the median's in the middle. It's not an average.
Yeah, 30th percentile is lower.
Yeah,
it's
the 30th percentile is lower.
Yeah.
It's about 60% of the median, isn't
exactly.
it?
So that is really bad news. And I think, you can imagine that the effects on that would be that...
Well, I can, yes. Yeah. I know exactly how much I pay for rent.
Yeah, and so you would be forced to try and find somewhere cheaper, which might not be in such a good area.
Not possible here.
Yeah. So... we already know that a lot of people have to make up their rents. Their housing benefit is not enough, and they have to top it up from their benefit, and that can only increase with these changes. I'm afraid it's bad news. The other thing, just very quickly to tell you, since you're on job seekers allowance, is the other thing that they're proposing is that from April 2013, after 12 months on job seekers allowance, your housing benefit will be cut to 90%.
Sorry, your housing benefit
will be cut to 90%.
That's after 12 months.
After 12 months on JSA. How that will apply to existing claimants isn't clear as yet.
That's even worse. Yeah.
Yes, very, very bad news.
So, Rachel, and maybe I can ask you as well, Mike, what are people going to do who've rented somewhere in the expectation that housing benefit would carry on meeting that rent or a proportion of it, suddenly are going to find the amount they get reduced by a very big fraction?
This is not a joke. I'm going to beg in the street.
Well, yes,
beg in the street for my rent.
Absolutely.
The bloody Tories are bashing unemployed people because we're unpopular. And, I hate being a Jew like that, okay?
Right. Well,
you're right, Mike. It's going to increase homelessness. It's going to increase poverty. And the only thing that I can say is that at the moment we don't know if there's going to be any transitional measures to protect people who are already on the benefit. I can't comment on that, but there may be.
I mean, Mike's view, of course, is his own, though you can see he's very upset about it, and quite clearly. I have to say we have had some emails, or at least one email, saying they're very glad that people aren't going to get the housing benefit. Rachel, we do see headlines in the newspapers, don't we? Some of the newspapers on the front page about benefit scroungers claiming huge houses on the state. I think George Osborne said there were many people getting more than £100,000 a year housing benefit. Is that really possible?
It is possible. I think the headline case was about a house in Harrow, wasn't it? It was a very large house of a family with several children. And of course these things happen, but you do get families where they don't have any other options because of the place that they live. They're in London, they're in an area where rents are high and they have a large family. I think it's also worth remembering that there are actually very, very few of those cases.
Yes, I think the savings from that is going to be quite a small change. It's going to be 65 million to limit them to 4-bedroom houses, but the total savings from people on housing benefit is about £1.75 billion after 5 years. So that is a lot of money from people who, by definition, are too hard up to pay their own rent.
Yes, and it's a problem because you can't just rely on the private rented sector to bring their rents down.
Yeah, so I think Mike's been a very clear example of just how hard that's going to be for people and how upset they're going to be. And indeed, none of us can really say what can they do. There's not really any answer except trying to find somewhere cheaper, which is not going to be possible. Thanks very much for your call, Mike. I have a lot of sympathy with how you're feeling. Now we're going to move on to, in fact, I think I might take an email. We've had a lot of emails about pension age. People wanting to know what's going to happen to pension age. Now we know women's pension age is going up already. You have to be about 60 and a quarter to get the state pension at the moment. It's going up slowly. I think if you're 60 today, then you won't be able to get your pension if you're a woman until the 6th of September. And of course that also applies to other things like winter fuel payment and free bus passes. What's happening on state pension itself, Rachel? Because there are some plans to raise that even more quickly, aren't there?
Yes, well, there were already plans to increase state pension age beyond 65, and they were going to start in 2024. So all we really know at the moment is that they're going to look at accelerating that increase in state pension age, so it will happen more quickly.
But we don't know when.
But really, that's all we know for the moment.
There's going to be a review.
They're going to
so that answers a number of emails, all of whom are very concerned about that. But I think the thing to stress is that someone who's already reached pension age won't have the money taken away from them. That at least seems fairly clear. Let's go to our next call. Martin from Manchester. Your question.
Good afternoon, the panel. My question is about child tax credit and family tax credit. The family income is about 40 to 45,000 a year, and we have been getting letters from the benefit office demanding for paybacks. But yesterday, when the budget was being pronounced, I heard about 50,000 being mentioned as the amount a family can get before they are no longer entitled to get some of the benefits. But, and then something about 45,000 was also mentioned. So what I'm saying is, I'm asking is, I don't know the right place we could go to get this actually clarified, because we have now been bombarded with letters from the office, and they are demanding some amount. Actually, it's been going on for a long time now, because...
Okay, Martin, can I interrupt you, because I think we've got the point, and I think it is very difficult for people, and again, it's Rachel I have to turn to on this, that tax credits have been very problematic, and there are going to be more changes. Just run through them.
Yes. Well, just to look at your specific problem, Martin, I think the important thing is that you get someone to have a look at your award notices and the demands for repayment, and have someone go through your entitlement for you, because this overpayment could go back quite a while. I don't know how long it's been going on for, but it's important that you have it looked at to see whether you really need to repay this money, if so, how much and over what period of time. But just coming to the changes, what's changing is at the moment, if you have an income of under 50,000, you're guaranteed to get at least the family element of child tax credit, which is worth £545 a year. What will be happening from April is that what we call the second threshold will be reduced to 40,000. So you won't be guaranteed to get it if you earn over 40,000. So there'll be more people who don't get tax credits at all. There's also going to be an increase to the taper rate. So instead of losing 39p for every pound that you go over the lower threshold, that's currently 6,420, it'll be 41p in the pound. So you'll lose your tax credits more quickly. But against that, we know that there's going to be increases in the child element of tax credits. So swings and roundabouts is giving us some money but also taking some away.
Swings and roundabouts, but overall it will save £3.25 billion. So it's mainly coming off, isn't it? Though some people will get it back. Thanks for your call, Marshall. I'm going to move on because we're coming up towards the end of the first half of the programme, and I'd just like to squeeze in, if I can put it like that, Mr. Gerald Allen from Cottingham, Cambridge.
Good afternoon.
What's your question?
I run a small business and I pay business rates on my premises. The Labour government announced that there was going to be a 100% discount on business rates starting on the 1st of October this year for a period of 12 months. Has that been cancelled or is that still going ahead, please?
Well, fortunately for all of us, I think Anne
Redstone
knows the answer. What is it?
Yes, the government have confirmed that the level of small business rate will be temporarily increased for a year so if your rateable value is up to £6,000, then you'll have complete 100% rate relief. Between 6,000 and 12,000 it will be tapered. So it does look as if they have adopted the original proposal. So you should be reassured.
Yes, thank you. I heard that they were cancelling these funny little carry forwards of the increases, but I didn't hear any mention of that 100% relief. That's very good to hear. Thank you very much.
So much wasn't mentioned, Gerald. And just before we finish on Radio 4 FM, I'll just reassure other people. We've had a lot of emails from people wanting to know about the age-related tax allowance. The one for people under 65 is going up by £1,000 from next April. No mention at all of the tax allowances for people aged 65 and above. I'm told by the Treasury that although it wasn't mentioned, the original plans, which were to raise it to £10,000 for those over 75 and with inflation to about £9,900 for those aged 65 to 74, are at the moment still in place. So unless there's a further announcement, those allowances will still be going up. So that's some reassurance for the many emailers. We may come back to the details of tax allowances in our second half hour, but that's all we have time for on Radio 4 FM. And my thanks so far for their contribution to Rachel Hadwin from Working Families, Graham Hooper from Best Invest, Professor Anne Redstone of King's College, and Leonie Kurzweil of PricewaterhouseCoopers. Thanks for all your calls and emails. Now you can carry on listening on Radio 4 Longwave. You can get that on older radios and on Sky Channel 0143. And you can listen and watch on our webcast, bbc.co.uk/moneybox. Couple of days you can read a transcript there of the whole show. I'm back at noon on Saturday with Moneybox, and I'm here to take more of your calls on Moneybox Live next Wednesday afternoon, when the subject will be probate. And now this is Moneybox Live on Radio 4 Longwave and our webcast, bbc.co.uk/moneybox, where you can also see us if you really want to. Let's press on with your calls and emails. Guests laugh nervously at that point. My guests are Rachel Hadwin from Working Families, Graham Hooper from Best Invest, Leonie Kurzweil of PricewaterhouseCoopers, and Professor Anne Redstone of King's College. And our next question on Longwave and the web is from Ian in Dalton-in-Furness. Ian, your question.
Hello. My question is, I'm getting remarried next year.
Congratulations.
Thank you very much. And my fiancée and I both own our own houses with quite a reasonable amount of equity in them. If we get married and then sell one of the houses, would we have to pay capital gains tax on it?
Now, you've raised a very interesting question. I'm going to pass it over to Leonie Kurzweil.
Well, Ian, I think what I'm going to tell you will be good news, provided that you sell the house within 3 years of getting married. It should be totally exempt from capital gains tax, provided until you got married you lived in it as your own home and your main home.
Yeah, we do live both separately at the moment as our own. They're in our own names of the houses. So.
Right. In that case, once you get married, you've got 3 years to sell.
Right. Excellent.
And of course there is a big difference, isn't there, between a married couple and a civil partnership and two people who are not in a legal relationship and if they own two properties.
Yes, this is one area of the tax system where they actually discriminate against married couples and civil partners. In that if you're just living together, in inverted commas, but you each have a house, you don't have capital gains tax on either house.
So you can nominate, each of you can nominate one of those homes to be your main residence.
Yes, so you can be, in other respects, exactly the same relationship, except that you're not married or in a civil partnership. But you can have two tax-free houses. As soon as you get married or move into a civil partnership, you can only have one. Right. And that is a really big difference.
Right, so good news, Ian, but sell up within 3 years if you want to avoid the tax. And Rachel Having, could I just bring you in here, because there's a big difference, isn't there, between tax and benefits, because in benefit terms, just living together is exactly the same as being married as far as your benefit calculation is concerned.
Absolutely, yes. If you live together as man and wife or as with a civil partner, then you're cohabiting and your income is assessed as a whole. You get benefits as a couple. So I don't know whether that would affect Ian, but it's certainly something he might want to think about for the future.
Yes, and of course the coalition government has said, or at least the Conservative half of it has said, they wanted to end what they call the couple penalty, which is you get more benefits if you live separately than if you live together.
Well,
not heard anything about that at the moment.
Interestingly, both that and the tax relief for being married seems to have dropped out of view for the moment anyway. It may return. But arguably you can never get rid of couple penalties because it does cost more to live in two separate houses than it does to live in one.
Yes, anyway, but maybe when Ian Duncan-Smith has his review we'll hear more of that, but at the moment that's not changed. Anyway, Ian, thank you very much for your call. It's an interesting point, and we'll move on now to Nora from Faversham. Nora, your question.
Oh, hello. I'm just interested to know whether the new allowances will make any difference to my widow's civil service pension tax plus my state pension, which the tax is taken from the civil service pension, of course. I'm 76, and I get a state pension, which I've just done a calculation, which is £648 a month, and my civil service pension is £442 a month.
Right, Nora, may I ask if you're over 65?
I'm 76.
You're 76, so you are over 65.
Yes.
So you won't benefit from the extra £1,000 tax allowance. But let's just talk about that, because we haven't so far.
Okay.
Anne Redson, the extra £1,000 tax allowance, who's going to get that?
You will only benefit from the extra £1,000 if you're not a higher rate or additional rate taxpayer. So if you're a basic rate taxpayer or a non-taxpayer, then you will get this extra allowance. But unfortunately, if you're over 65, you already get a higher allowance, and they haven't particularly increased that.
No.
But we do think, don't we, Paul, that they're going to index it?
Well, that's what the Treasury told me. They're going to index it, and so for someone of 76, your tax allowance will go up to £10,000 next year.
Oh.
That actually might be slightly less than indexation, but that was promised by the previous Chancellor. In fact, I think it was promised by Gordon Brown in the distant past, and that's what the Treasury seems to be sticking with. But we won't know those rates until either the pre-budget report in the autumn or possibly the budget next spring. But certainly there's no plan to freeze them, Nora, so they will be going up.
No.
Though not by the full amount.
Well, obviously the civil service pension was frozen this year. There was no increase on it, and of course the
state pension yes.
Affected me with my husband's earnings related.
Indeed, and from next April you'll have a lower rise in that part of it and in your civil service pension because of the change to Consumer Prices Index. So not great news. You won't actually be worse off, but
I won't starve.
you won't get that much more. Thanks very much for your call. Now
Thanks
we've had a message from my colleague Vincent Duggleby, who isn't able to be with us today, and he says we're missing the point on drawdown and annuities. Graham, I'm going to pass this one over to you. He says you can always get an annuity past 75, which is true, but it's when you die, when you're drawing down, that the tax consequences are much more favourable. The advantage lies with drawdown, he says.
There are flexibility. There are ways of taking annuities through drawdown, where you can draw down cash actually over a period of time at a higher rate and you get an annuity, and only at the very end you have to force to sort of take the annuity. So in terms of a planning perspective, there are things you can do with certain pension types that will give you more income than you'd ordinarily get from an annuity. So Vincent, as ever, is right.
As ever, yes. Thank you, Vincent. He was kind enough not to say, I thought you should have known that, which I once said when I emailed into the programme, and something that I thought hadn't been quite fully explained. Anyway, thank you for that, Vincent. I'm going to take another email now from Beth, who says, you asked if anyone who's going to be better off would contact you, so I'm doing that. The lowering of the tax threshold will benefit me, as will the increase in the state pension. I live in France. I already pay 19.5% VAT, so that won't affect me. And I get rent assistance here through CAF, so I'm not going to expect anyone to know what the benefit and tax system is like in France. But she says she is slightly better off, but she does say it's very complicated. Well, yes, it is. And it's worth pointing out, I suppose, isn't it, this rise in VAT, which we haven't touched on yet, to 20%. That really brings us up more in line with European norms. Leonie?
Yes, well, from 4th of January next, the rate will go up to 20%. So there is time, if you like, to plan for it.
Just buy things in advance.
The sales, yes.
You want to buy a new sofa.
Make the most of Christmas and January sales.
Though it is a funny time, isn't it? Because it will hit those January sales, won't it?
Well, they seem to get earlier and earlier every year, don't they? So, yeah.
Be out on Boxing Day is the answer, obviously. But the rise in VAT. And also, there's a rise in insurance premium tax. Graham, is that?
Yes, that's for general insurance, travel insurance, things like that, which is rising margin. Again, it's spread over and it's quite small, so it can be lost in the mist and fog. But they do take quite a lot of money over that, and I think it's the main benefit to the government and the Treasury comes, I think, from travel insurance and things like that.
Yes, it's those kind of protection insurances, as they like to call them, which I think are going up from 5% to 6%.
That's right.
Which will bring in some extra money for the government. I'll try and find that figure in a moment. But that's another thing that you should buy before the 4th of January. If it runs out on the 5th, it's worth doing your renewal a couple of days earlier to save yourself a few pence.
I think the number's 500 million a year.
Well done. You're quicker than me, and as you should be, working for PricewaterhouseCoopers. 500 million. Well, that is quite a significant amount of money then, isn't it? Insurance premium tax. And I suppose it's worth pointing out that most financial products are not subject to tax or
They're not,
VAT,
no.
are they?
And the insurances that aren't are the main sort of life assurance and personal protection, things like that. So it tends to be things that you're insuring rather than health and so forth, really, at the moment.
Because some people have suggested extending VAT to food and indeed to financial products, which would bring in an awful lot of money. Does anybody have those figures to hand? I think it's about 30 billion altogether.
It would be an extraordinary amount of money if this is going from zero rated and bringing them in line with current VAT.
Yes, I think food
it's
itself.
About 29 billion, something like that. It's a massive hit in one go.
Yes, which the government has said it's not going to do. I don't want to frighten everybody. They have said they're not going to do that. Right, let's move on now to our caller, Duncan, who's calling from Hampshire. Duncan, your question.
My question relates to housing benefit, and I'm ringing on behalf of my brother, who has a severe learning disability and lives in a privately rented house. He needs a second room for his carer. He receives 24-hour care. Now, at the moment, through housing benefit, that's not funded. I heard on the budget yesterday there seemed to be a definite commitment to say that people with a disability who needed that second room would get that on housing benefit. Am I right?
Yes.
Rachel.
Yes, thank you, Paul. Yes, sorry for putting in there. Yeah, you're absolutely right. This is one of the better things to come out of the housing benefit changes. They're committed to, from April 2011, allowing claimants who've got a disability and have a non-resident carer will be allowed to have an extra bedroom in the housing benefit assessment. So it doesn't even have to be a carer who's there all the time. You can still be assessed as someone who needs to have a carer there and who can get a bedroom in the local housing allowance. Right. So I think that's good news for someone in your brother's situation.
There's going to be a small extra cost for the government on that.
Yes.
The only thing that I picked up from earlier on in the programme is that it looks like the actual locally assessed levels will drop.
Yeah, that's the bad news, which I mentioned to a previous caller. So assuming that your brother then has a 2-bed house for him and his carer, the cap of the local housing allowance is going to be 290.
Right.
And what I then went on to say is that later next year, from October, the other bad news is that the local housing allowance will be set at the 30th percentile of local rates, so it'll be lower.
Yeah, so that's about 60% of the average, which is the median, which is what you get at the moment. So it's it is quite a big cut, and as we said earlier, we're not quite sure how that's going to be dealt with. For if there's going to be any transitional provisions or anything for people who are going to face a big cut.
People already renting and claiming. Yeah.
Could I quickly ask?
So very quickly, if you wouldn't mind, yes.
Does the government have an obligation to carry out any sort of disability impact assessment on these changes? Because for many disabled people, what happens if when they drop it to the 30th, there isn't enough money in the pot to pay the rent? A lot of disabled people need quite specialised accommodation that isn't going to be necessarily the cheapest accommodation on the market.
That's a really good question, Duncan. That's something that hadn't occurred to me. And I'm going to go away and think about it, because, as you probably know, there is an equality duty on public bodies.
That's right.
And local authorities, and it is local authorities that operate housing benefit. So I think that would be one to go away and have a think about.
So, legal challenge to the budget.
Yeah,
You heard it first on
Nice
Moneybox Live on Longwave and on the web. Well, thanks very much for your call, Duncan.
Thank you.
And I'm just going to read out another email. This is from Rowena. And she also will benefit from the budget. Now, she's in the interesting position. She's a woman who's aged between 60 and 65. And, of course, she doesn't get only the higher age allowance. So she is going to get this extra £1,000 tax allowance.
Yes.
And she's got a state pension. She's got a bit more other income. So she's going to benefit quite,
from next
wholly
April.
from that. So she'll be how much better off?
Yes. Marginal rate of tax will be 20%, so £200.
Couple of
better
£100,
off,
yes. So she is going to benefit,
and hopefully that's going to be, the start of a phased increase in the allowance. We might see something the following year as well.
Yes, that will take it up towards the level for the over 65s. And she concludes by saying, small income, yet I'm still able to save despite huge council tax bills and all the rest. Amazing. It is indeed, Rowena. Well done. Thank you very much for emailing us. Let's move on to Hazel now in St Albans. What's your question, Hazel?
Oh, hello. Well, I'm 82, and my income is the state pension and quite a small widow's pension from my late husband's salary, and some interest from bank and building society. But I'm pretty much, I would say, less than £10,000, which is my income. And I'd like to know how the banks or the building societies will know not to deduct any tax.
Yes, this is a difficult problem, Leonie, isn't it? Because they do deduct it automatically normally.
They do. What you need to do is, I can't remember the name of the form, but go and speak to your bank and say to them you need to complete a form that you don't pay tax and that you need to receive your interest gross.
Right.
The form, I think, is an R85, which you can get from your bank or building society to say that you're eligible to receive income or interest without the deduction of tax at source, and they'll credit to you straight away. Indeed, if you are losing it or you're having to claim it back. But it sounds like you might be losing it unnecessarily.
Worth saying too, you can go back 6 years. So if you've been having interest tax wrongly deducted on your interest for some years, you can go back 5 or 6 years and get all of it back, and some people have done that.
I thought it was only 3 now.
It's been reduced from 6, but it's more than 3. It's potentially 4 years and 10 months.
Right.
But you need to, if you have paid tax unnecessarily, you need to make a repayment claim to the revenue to get the money back.
Yes, and you can get, I think, is that a different form? That's an
That's
R40.
an R40.
And
yes.
I think I'm right in saying you have to print one off for every year that you go back. So if you've got access to the internet, you can print them off, or you can get them.
Phone the revenue; they'll send you copies.
They'll send you copies, and you can fill them in, and you'll get your tax back for 4 years and 10 months. Now that's something that I've just learned today. So thank you very much for that, Leonie.
And I have to ask for both forms, do I?
Well, they're two different people. The Form 85 tells the bank not to take any tax from your interest for the future.
Yes.
And the R40 is the one to the revenue that gets your tax back from the past. Yes.
Yes, I understand.
Yeah.
Well, thank you very much. That's very helpful.
Thank you very much for phoning us, Hazel. And we're going to move on to Eloise now, who's in that familiar town of Mobile. Eloise, your question.
Hi, I have hopefully a quick query. I am on job seekers allowance. I'm single and have no children. I was made redundant a while ago. I've decided to start my own small business, but have no capital, and I need some assistance to get going. Last week I actually looked into this, and I was told that I would be eligible for a small amount of tax credit, and obviously because I was on a low income, I would still be entitled to housing and council tax benefit, obviously till the business started to make money. I'm very scared that is now no longer the case, and I'm going to have to stay on benefits, and I really don't want that to happen. Am I right or am I wrong?
Well, I think for the time being, you're wrong in that none of these changes are coming in immediately for benefits, that is. They're coming in April, so if you can get things started sooner rather than later, you should be okay. And you probably know about things like the 4-week run-on of housing and council tax benefit when you first start work. You come off job seekers allowance and your housing benefit and council tax benefit continue at the same rate for 4 weeks.
Right, I don't think that will apply to me because I'm going to be signing off and going on to tax credits anyway.
Yeah, but it depends how long you've been on job seekers.
About 18 months.
Okay, well, I think it may apply to you then.
Oh,
and I think that's something that you should ask the
okay.
job centre about whether you get that protection for 4 weeks.
Right, okay. And if I have to sort of put off for, obviously starting a business is complicated. If I do have to put it off for a little longer, just in general anyway, are people going to find it more difficult to start small businesses, that don't involve needing a lot of capital and they just need a bit of support to start off with? Is that going to be something that people are going to now not be able to do from April?
I think that's a question I probably have to pass to one of my colleagues. You're not really talking about benefits now, are you? You're talking about start-up costs?
No, I'm not actually, because I'm not actually asking for any start-up costs. I'm asking for some living money while I start and build up business.
Yeah, as you may have heard earlier in the programme, if you rent privately, there are going to be various caps on housing benefit. One thing that I didn't mention, which might be of relevance, is that the government are going to put more money into a pot called discretionary housing payments, which local authorities can use to people who get some housing benefit or council tax benefit, but it's not enough to meet their rent or council tax. And the thing about discretionary housing payments is it's great there's going to be more money there, but they are discretionary and they are not indefinite, so the local authority can't make an award to you that lasts forever. But I suppose in principle it could be possible that you could get some help, and if your rent was capped, you could get some help until such point as your business was going better.
Sure. All that worries me is there's going to be a lot more people on the dole than there already are, which is ridiculous already, and people who want to start small businesses who don't necessarily have any money saved are not going to be able to live.
If you go to the Department for Business, they do have help for people who are starting businesses, and it is quite useful, and also your local Chamber of Commerce may be running something, so it may be worth exploring those local sources of help and advice, because there is help available for people wanting to start businesses. And if you do a search on the internet and go to the Department for Business and your local Chamber of Commerce, that might help. Thanks very much for your call.
Thank you very much,
Eloise. Can you ask something about savings now, Graham Hooper? The allowance for ISAs, tax-free savings, now that hasn't actually changed yet, but they are going to change it in future.
Yes, it's £10,200, which hasn't changed at all, and it's been sort of rather arbitrary in terms of the way that it's sort of staggered up over the years. But it is going to be linked now to CPI going forward, so there will be marginal increases, and they will probably be unusual amounts as we go into future years.
So it might not be 10,200; it might be 10,412.
Yeah,
yes,
so
okay.
Quite an odd number. Quite an odd number, but I think with the change of the high rate taxpayers, particularly at 28% for capital gains tax, it does become a more valuable tax haven going forward for an awful lot of people.
Yes, and certainly people who've saved in that shelter for the whole time it's existed could have a very great deal of money in there now.
Yes, I mean, well into hundreds of thousands of pounds for some people if you saved in the right funds at the right time. You built up a substantial tax-free lump sum which you can draw tax-free income from. So a good alternative in terms of supplementing pension income going forward.
Yes, okay. Another email, better off following the budget. This is from Northampton, I'm just looking for his name. It's from Louise, her name. Small business, low income, don't spend a lot on vatable products, run one vehicle, last holiday on a plane was in 2002. We'll be better off sufficiently to cover any VAT rises. Well done, Louise. And on the subject of VAT, we've had a couple of emails. Are new build houses still 0 rated for VAT? Easy to answer. Yes, no change there. And any VAT rise from 5% for gas and electricity, and that's staying the same as...
I think that's staying the same.
Yeah.
I haven't heard anything.
Anything that's not been mentioned by the Chancellor specifically.
Yes.
And we've also had an email from someone who's obviously been doing the arithmetic. Leonie, it's not actually about you, it's about what the Chancellor said, but you did mention this earlier. If the personal allowance is rising by £1,000, why did the Chancellor say it would make people £170 better off? 20 pence in the pound, it should be 200, which was the point you made.
Which is my maths.
Well, I think it's everybody's maths, but not the Chancellor's apparently, and as I understand it from the Treasury, the reason is that the personal allowance would have gone up anyway next year by inflation,
right.
So it would have been... So the £1,000 is on top of this year's allowance,
piece.
but in fact, but then when I checked with the Treasury about what figure they were using, they were a bit vague about it, and I'm not even sure that 170 is quite right. But anyway, that's why the arithmetic doesn't quite work out, and that's a message from a very suspicious Chris Averill. Thanks for that, Chris. I hope we've cleared that up. A few minutes left now. Donald's calling us from his mobile. What's your question?
Hi, hello. I understand from the budget that disability living allowance will be, or existing DLA claimants will be subject to a new regime of medicals from 2013. What my question is will that medical regime apply to all disablement benefits? Because I also receive what's known as industrial injuries disablement benefit. And I'm just wondering, since I've received it since 1996 for an indefinite period, whether or not I've got that to look forward to for both medicals, or whether it will be one medical and both benefits will be assessed at the same time.
I didn't see any mention of that, Rachel.
Donald, I think you can rest assured as far as your industrial injuries disablement benefit is concerned, in that there's been absolutely no mention of having a new medical for that. What they're referring to for the new medical assessment is disability living allowance only. They haven't talked about attendance allowance. So they've said it's going to be working age claimants. No mention of IIDB. So if there are going to be any changes to that, they would be announced separately.
So it looks as if it's not going to affect Donald, at least his industrial injuries.
That particular
benefit.
change does not affect your industrial injuries disablement benefit. That's not to say that they won't look at that as well at some point, but hasn't been mentioned.
Yes, I was a bit concerned this morning when the Chancellor was on Radio 4, and he did say that the cuts that were going to have to be made in various departmental budgets were very big, very difficult, and they would be smaller if we could only save more money through welfare benefit cuts over the next few months. So there's going to be more of this, Rachel.
We haven't seen the end of the welfare changes.
So it's a case of wait and see, basically, on the industrial injuries, basically.
Yes, and although I haven't looked at the figures, but I don't think it's a headline benefit in the sense that the government are saying we're spending too much money on this, there are too many claimants, what are we going to do? So it's not in the firing line in the same way as DLA and housing benefit.
Okay, right, thanks very much.
Okay, Donald, thanks for your call. And we've had a message from Paul, who says if Moneybox listeners have a problem with benefits or demands to repay working tax credits, and we've had a number of those, they should contact their local Citizens Advice Bureau who'll look at the problem. Well, that's certainly true, though I think you may face a bit of a wait at some Citizens Advice, but the advice is very good and free when you finally get it. Thanks for your email, Paul. Let's take another call now from David in Crook in Durham. David.
Hello, everybody. I'm perhaps a bit unusual in that I'm early retired, but I don't draw any kind of pension. I just live on the interest from my bank and building society savings. And so at the moment, I benefit from a special 10% income tax rate on something like the first £2,400 worth of interest over and above my personal allowance. And I'm just wondering whether that 10% rate is still going to carry on in the future, or whether it's quietly being dropped to help pay for the increase in the normal threshold.
Again, as with some of the other things that have been raised, there's been no sign that it's going to disappear, David. So I think you should have it at least for next year. I would add to what Paul said before about this not being the end of the welfare cuts. It may also not be the end of the tax rises.
But so far, so good.
So far, so good.
Yeah,
okay.
I was told by the Treasury this morning that if something wasn't mentioned in the budget, we should assume it wasn't going to be changed. And by the budget, of course, they mean the very great volume of books and documents that we've all been trying to struggle our way through over the last 24 hours. Anyway, thanks for your call, David. It looks as if you're going to be all right. And we've had an email from Pam, who says she's part of a childless, low-paid couple, and she says she's going to gain, presumably by the extra tax allowance. Are there any other things she should be looking out for, Rachel? Or is she right? She's going to gain.
Well, very much depends on her situation. In some ways, childless working couples will lose out the most because if they're renting privately, because their take-home pay goes up, pay less income tax on that, and their housing benefit therefore goes down. So it really depends what kind of bracket she's in, and also whether she's renting or paying a mortgage.
Okay, well, let's hope you are better off, Pam. Thanks for your email. And we've had a slightly complicated email from Christina, who says she's a freelance social worker. She has a small limited company, annual turnover less than £60,000. How will I be affected in terms of national insurance and PAYE as a director of my company and corporation tax? Anne?
I think that the important thing here is to wait and see, because what the government has said is that for small businesses, particularly small businesses like yours, which are freelance businesses, they are going to conduct a review, and that's going to start sometime over the summer. It will look at, I'm sure, the position for national insurance on payments that you take out of your company. So I think it's something you just have to wait. We'll have to wait and see, but it is on the agenda.
This is one of the most tricky problems, though,
Indeed,
isn't it? Some people formed companies when they thought they were better off and ended up no better off at all. So I think wait and see. Sorry, that is the answer to that question from Christina. And we now have another question from Aaron. Aaron, what's your question?
Hi there. I just wanted to know if the budget's announcements have affected or increased the cost of buying a house. For example, has the stamp duty been affected at all?
Right, yes, we've also had an email about this from Paul Nichols. Is stamp duty going to change? One of the pre-election promises from the Conservatives was to abolish stamp duty on properties worth less than £250,000. And he says that would offset some of the pain caused by the rise in VAT. So two people there with a similar point. Leonie?
There was nothing announced yesterday. We do know that we've got a 5% SDLT stamp duty charge for properties over £1 million coming in from next April, but there was nothing yesterday that would change the cost of buying a property.
No, and the relief for first-time buyers is on property under £250,000,
yeah.
And that's got a 2-year life,
Yes,
I think, so that
yes.
runs out. And again, no mention that would be extended or changed, but of course they have still got quite a
They've
while
got time to
before they
say
do
something,
that.
yes.
Okay, Aaron, well, it looks as if nothing really much has changed. And what about, Graham, what about interest rates? I mean, that will obviously affect home buyers. What are we expecting on interest rates?
Well, interest rates, it's sort of steady as you go, really. We're still at, 0.5% Bank of England base rate. We are planning with certainty. I think the budget was well received by the foreign currency market and the gilt market. Indeed, the gilt issuance is going to be 20.2 billion less than was forecast, so that's generally deemed to be a good thing.
They're going to be borrowing less money.
Yes. So for interest rates, that's better than it was. So can't see any real immediate movements up, as it were, really at all. So in terms of planning for mortgages and that sort of thing, get in while you can.
So good news for home buyers. Well, thanks for that, Aaron. And now, just before we finish, we've got about a minute left. Let me just ask you all very briefly: was this the toughest budget for a century, and was it necessary, Leonie?
Listening to it was one of the easier ones to listen to, but there were a lot of really tough things in there, particularly, I think, around the things that Rachel's been talking about.
Rachel?
Well, certainly the toughest one that I can remember. There's some things that we haven't covered in the programme, include the fact that the health and pregnancy grants going, Sure Start maternity grant will only be for your first child. Whether it's necessary, I'm not an economist, but it's tough.
And very briefly?
Yes, I think it was necessary. I think you were living in a fantasy world.
OK, well, let's hope we've dispelled your fantasies. My thanks to Anne Redston, Leonie Kurzweil, Graham Hooper and Rachel Hadwin. I'm back at noon on Saturday with Moneybox. I'm here to take more of your calls on Moneybox Live next Wednesday afternoon at 3, subject probate. Meanwhile, you can read a transcript here on our website, bbc.co.uk/Moneybox.